Hey you guys, what's going on? Shaquan from SLFX Trading here, and in today's video I'm going to be showing you guys 5 currency pairs that you can get involved with for the week. So I want you guys to know that these are going to be swing trading setups, and if you do not know, I am a swing trader, which means I hold my trades for more than 24 hours. The reason why is because it allows me to show up one day a week for about 15 minutes a day, and once I set the trade, I'm just able to go on and let the trades go do their thing until they hit profit or they take me out for a loss. But either way, I kind of get to breathe through each trade, think each trade through, and be patient, because if you haven't noticed about the markets are going to move how they're going to move. We cannot control them, and they like to move in big spurts, and I like those big spurts. So that's just me telling myself how long I want to be in the trade, how much of the pie I want to take home, and trading the same setup no matter what currency pair that it is. Now, what I'm really looking for are trending currency pairs, meaning I can see if they're fluctuating up and down going to the upside, or fluctuating up and down going to the downside. And that is what I trade. I am a trend trader. So I am seeking currency pairs that have great trends, because it's really good stability until the market reverses and go the opposite direction. So I'm like what you would probably call like a one-way driver. Like I go one way and one way only. My goal is not to counter trend trade. My goal is not to get on the lower time frames. Really, the goal is to breathe so I can spend time during the day doing what I need to do and let my money work for me while I sleep. So if this is something you're interested in, let's go to the first currency pair, which is going to be the Australian dollar, Canadian dollar. Now, I want you guys to rock with me for just a second on this currency pair, okay? Because we're going to play a game out of this, and I love playing games. But when I play a game, I ask questions. And asking questions means you have to find the answer. So here's the first question. If I ask you what is the trend of this currency pair, what would you tell me? It's either an uptrend or a downtrend. It's only 2 trends, you guys, up and down. That's it. So here's how we're going to look at this. So we're just going to take a section of this chart, and keep in mind that when it comes to a trending market, you don't need to go all the way back to the left to find a trend. The trend can literally be in your face. So one thing I teach people is not to go too far to the left. We don't look left and say structure leads clues. What we actually say is we stay to the right and follow the trend. And so that's what I'm going to be doing right now. I'm just going to follow the trend on this. And so that's what I'm going to be doing right now. I am just going to follow the trend in this. And so one thing that I've noticed is the lower highs, 0.97968, 0.97201, 0.96445. So from March 11, 2021, all the way to about April 1st, 2021, you guys, that's less than a month, price was trending down because the exchange rates at the top peaks of the lower highs continue for sell-offs for the Australian dollar CAD. And what that means is that the Australian dollar CAD had less value than the Canadian dollar. So as a consumer, if I were to consume the Australian dollar with Canadian dollar, that means that I could buy the Australian dollar cheaper. But as the trader, I can trade the information. So as they're buying cheaper, I'm selling for profit, right? Because that's really what we do here in the forex market. While people consume, we sell or buy based on the supply and demand. And what this means is that the inventory, the Australian dollar inventory, was being bought by the Canadians but being sold by us because they're buying more of it, and we're selling it because it's cheaper for them. It's a discount. They're buying at a discounted price. We're selling the discounted price. So that's what we're doing in the forex market, is how we make our profits. So now what I'm noticing is something really interesting. What was on my mind, you guys, is that when it comes to trend, there are reversals, right? And price can't go down forever. Price cannot go up forever. And the only way we're going to notice when the trend is going to change is based on the exchange rates, not the structure. And this is something that I like to talk about a lot. Your market structure, whether you're trading support and resistance, whether you're trading a trend line, whatever the case may be, is secondary to your trend. So your trend comes first because everything we do is based off price, the exchange rate that we see on our price scales. And what I've noticed about the price is 0.96519 is higher than 0.96445. At the moment I see this, in my head, 2 thoughts occur. Number one, we could be now in the potential key reversal point, where now that we have a different exchange rate, we have a trend switcher. Price has now said, listen, we're going to go up back in value. So what that means is that the Australian dollar its value has increased over the Canadian dollar. So as I'm looking at this on my price chart, that's what I'm going to take heed to. So that's the first thing. And now here comes my market structure. And market structure is basically what you place on the chart to say, if price gets here, I could potentially have an entry from this area, right? Market structure, structure at market price. So I want you guys to always think about it in those terms. Market price is basically the exchange rate or exchange rates you're hoping price will come back to and stay above or below. Market structure, and you plot that on your price chart. So now what I'm looking at is, okay, well, if price can stay above 0.94918, because that's the number you need price to stay above, if this thing has given us a true higher high, prayerfully this area here is the true higher low where price will push up from. Okay, now it doesn't matter that it broke my zone. That does not matter. What matters is that price stays above a number, 0.94918. And if it does, you guys, that means that we could potentially go back and push up above 0.96519 and even higher, where my personal take profit was going to be. Another one is 0.96944. So that's the Australian dollar CAD in a nutshell. The next one that we're going to go to is going to be pound USD. Now, dealing with pound USD, you guys, I'm already in this trade, right? So it's already running. I'm already in profit. It's already hit my first take profit. So I have another one running. But I already know that price can pull back. I'm okay with price pulling back because that means that I could potentially enter into another position, which is what I'm hoping I can do this week. So I'm setting my charts up for the future and for now. So AUD CAD can be a potential play I trade today if today ends bullish. Pound USD needs to retrace a little bit more in order for me to enter. So this will be my future setup for potential trade this week. So what I'm seeing here, and let's go based on the numbers again. 1.40, $1.36, $1.39, and $1.3669. Okay, and these numbers are very important, and sometimes you got to zoom in to watch your wicks. The reason why this is important is because price is creating lower lows and lower highs, which now means because we have a new lower low at 1 point or $1.39, it's important because I need price to stay below that exchange rate. I do not want to see it come back and toggle above because I'm in a sell. If price goes above that number, that means that we're going to be potentially reversing. Once again, in the forex market, you do not trade structure, you're trading numbers, okay? And the candles are a representation of that. So if you ever tell someone I am a price action trader, what you're saying is you're trading based off of certain exchange rates. Once again, the structure is secondary. The structure is telling you, or where you plot that structure, where you want to enter the trade based on the particular exchange rate, okay? So now with that being said, if price can pull back up in between 1 point or $1.38 and particularly between $1.38.1, $1.38.3, then I am hoping that price can give me a particular price action candle and then continue back to the downside. Now I only trade based on 4 candles. I talk about them all the time on Instagram. I actually have a video here on YouTube talking about the 4 candlesticks that I look at and why. Because they repeat themselves the most. And as a matter of fact, one is repeating itself right now if it closes this way, which could be a bullish engulfing candle. But if price can pull back, you guys, then I will be more interested in getting into a sell position. First targets will end back at $1.3669. Second target is going to be back here to $1.35.843. So I probably enter in 1 or 2 more positions, let them ride since I'm already in the trade, scale down my first profit to risk free so I don't lose any money, and then just let that be. Okay, so that's pound USD in a nutshell. Now I'm about to go to another pair that kind of correlates negatively or oppositely with this pair. Now, is it 100% of the time? No, but they're mirrored reflections from time to time. And that pair is going to be Euro Pound. So dealing with the Euro Pound, one thing that I'm looking at is, again, my exchange rates. And I don't have them on here right now, but I'm going to walk y'all through this step by step, okay? Once again, you don't have to go too far left to see what price is doing if you focus on the trend first. So what I'm focused on are my lower high peaks and my lower low peaks, just to give me a sense of direction. And a big tip that I love giving traders is you only really need 2 highs and 2 lows, right? So here I have 2 lower highs, 0.87296, 0.86462. I have two lower lows, 0.85302, 0.84722. What this means is that the value of the euro decreased against the pound. So as I'm seeing that, I'm understanding back then, this would have been a good time to be the seller in euro pound. However, price has passed a 0.86462, which basically means that this may be a good time to become a buyer. But I don't want to buy right now because I'll be buying high. So we have to stick to the principle buy low, sell high. Like, that's a really great principle to stick to. So instead of buying high, I am going to wait for a pullback because I don't know if price is going to stop here. Price can just keep going up if it wants to. And one thing I learned about the euro pound, you don't play with the euro pound. It's a slow moving currency pair, but it can fake you out just as quick as any other pair. So I'm really careful when I'm trading this particular pair. Now, what I would like to see happen is if pound USD can pull back and then drop, I would love to see this pair pull back and then increase back up to the upside. So this is what I'm going to be waiting on. I'm going to be waiting to see if price can decrease to stay above 0.84722, potentially back between 0.856 and 0.855. And if price can pull back into these exchange rates, continue back up to the upside, then I will be more inclined to take a buy. And then first target's going to go back up to 0.86969, and I just may have a potential trade that keeps running. Now, you guys keep in mind that as I'm talking about these, I'm going to be picking the cream of the crop because I have 5 currency pairs here. That does not mean I'm going to be trading all 5 currency pairs. A few of these pairs may weed themselves out, which means I may not even get a potential trade if they don't do what I need them to do. And I have 3 rules. Once I understand the trend, I need price to come back and touch my market structure, and then I need price action to give me a particular candle in order for me to enter a trade. I just need one of the 4 that I enter in on. And once I see that, I'm in the trade. But if one of those rules is not met to where I can see trend clearly, price has touched my zone, I get that price action candle that I'm looking for, I do not touch the trade. And it's really, you have to really be strategic when you're entering your trades and have your set rules. And these are my set rules, right? And if they're not met, I don't do anything. So they'll weed themselves out. So really, when trading, it is a waiting game. And I'm not trying to trade everything. I want the best of the best. I want the cream of the crop. And you should want that for yourself too. But in a nutshell, you guys, this is how I'm looking at euro pound. So the next one that we're going to go to is going to be USDJPY. Now, dealing with USDJPY, I want you guys to notice the trend on this thing, okay? The trend is actually increasing to the upside. So we went from 1.09392 to 108.385 to 110.956. So as you guys can see, the exchange rates are increasing, right? And if the exchange rates are increasing, I'm hoping price can stay above 108.385, because if it pushes below that exchange rate, then guess what? I can say, oh, okay, price is going to continue to the downside now. We're going to be in the reversal stage. But until we're in that reversal stage, I'm going to keep looking for buys on this pair because the exchange rates are telling me to. And I want you guys to notice something that happened in the past previously within the last month in March. So this was the last high here at 109.231. Price pushed down to 108.337, and then it pushed up to 109.392. Now I want you guys to notice how price never went below 108.337. This is one of the reasons why I say we trade the number first. The structure is secondary, because I did have a bit of structure back here. And what that basically means is if price can stay above or below a particular number, you want to take a trade based on that alone and let your structure just guide you on where you want to enter the trade. And this is one of the things that I'm doing here. Do you guys see how I'm repeating the same rules? I'm repeating the same setup. It's not changing. Not even if price reverses, the rules will still remain the same. It just depends on if I'm the buyer or the seller. And when people talk about trading plans and trading setups, it's really detailing how you plan to take a trade, how you plan to enter a trade, and what you do in that trade. And this is one of the things that we're doing right here and right now. Okay, so if I get some bullish confirmation today or tomorrow, I don't know how today is going to close. I'm not trying to drop that in time frames to figure that out or to search it. I really want to stay on my best time frame that I like to take trades on, which is the daily time frame. So that's what I'm going to be looking for. I could have a potential setup if price can show me bullish information from here this week, and then I'll take price back up to the trade back up to 110.956. If not, I sit on my hands and I'll just let price be. This trade can invalidate itself. I don't lose money. I'm not in a losing trade. Then I'm good, right? So once again, this is how you go about picking the best currency pairs to trade for the week. We got one more we're going to go over, and it's going to be USD Swiss. Okay, you guys, so this one is similar to USDJPY. And dealing with this one, something that I want you guys to pay attention to is the fact that price is below my zones. So I get asked from time to time, Shaquan, does it matter if price goes below your structure point? For me, no, because once again, it's the exchange rate that matters the most. I want you guys to follow me here. Price decreased from 0.93793 down to 0.92141, and now we've toppled at 0.94765, creating a higher high, which means there is still value for the dollar over the Japanese yen. Now, at this moment in time, I do not want price to go past 0.92141. The structure is secondary. Remember, I just need price to touch the zone. Then I need price to give me my entry candle. Now, I have not felt comfortable entering a trade based on any of these candles, which means I am not in a trade on this currency pair because for me, it is not necessary at the moment. So once I see bullish information, a green candle, then yes, I can say, okay, well, maybe we can enter the trade because price wants to stay above 0.92141. You guys, you also have to understand that we're trading ranges. We're trading a range of a candle, which is why time frame correlation is very important. I'll give you guys an example. I have a red zone here. My red zone gives me permission to enter on the daily or the 4-hour time frame, and I want to drop any lower below that time frame, the 4-hour. My blue zone says, Shaquan, this information is from the weekly time frame. You have permission to enter on the weekly time frame or the daily time frame because the daily time frame represents 5 candles of one big weekly candle. So it makes sense to put those two pieces of the time frames together, right? Versus going from a weekly to a daily to a 4-hour to a 1-hour just to break the information down. If I already know that the bulls have control and I am looking for bullish information, but I break it down to a time frame that makes sense to where there's not too many candles or too many green candles and red candles in one area, then what I could do is minimize drawdown for myself. And I love teaching people how to do this because it allows you to see. If I went to the 4-hour time frame, the 1-hour time frame, the 30-minute or the 15-minute based on my blue zone, and these wicks do represent green candles on a lower time frame, then I will be thinking that price will continue up on that lower time frame, which means I will be in drawdown right now. Now, I'm okay with handling drawdown. I'm pretty fine with it. However, most traders are not. And what you'll try to do is figure out every single candle. You'll create rules such as break and retest, break and retest, break and retest. You'll keep entering a trade on the opposite side when you're not supposed to, or you'll keep putting in trades even on the right side but too early. And what that could cause you to do is it could cause you to go into more drawdown. And as price is going into drawdown, that is hurting your equity, right? And so that's something that you guys want to look at when you're actually placing trades. Be patient. There's no rush to enter into trades. There's no rush to make money when you let the money come to you. We don't chase the trade, which means we don't chase our money, okay? So very important. But you guys, I'm saying all of this to say that if price this week can show me some bullish information on this currency pair, I'll take a buy. And where am I going to buy back up to, you guys? I will buy back up to 0.94765. I'm going to buy with the buyers. Now, price goes below 0.92141. I do nothing. I'm not in the trade. I'll let it weed itself out. But I know who I am for the current moment. I am the buyer, and I'm not looking to do anything else but to buy. Okay? So, you guys, that's it. I hope you guys enjoyed this analysis breakdown. I hope you guys were able to follow it step by step with me. And if you want to see more of my analysis, if you want me to help you with your analysis and you want to be taught how I look at the charts as simple as this, clean, staying to the right, having 15-minute trading days, make sure you check out 2 links in my bio in the description. Make sure you check out the Swing Trading Society. We are in open enrollment stage right now, which means I can coach you personally every single week, which means you can view these charts with me in our chart and chill sessions every single Sunday and see what we're looking ahead more than this in the market every Sunday. And you get taught by me every single week in our masterclass that happens on Tuesdays if you're new, and Wednesdays if you're one of my OGs. Also, you get access to a book club that we're actually starting this Thursday. So you guys don't miss out on the goods. We have so much in store. But if you say, Shaquan, I want to learn this as quick as I can, I want to work with you personally one-on-one, then make sure you guys click the link in my bio to book a discovery call session with me. It's free. 15 to 20 minutes. We'll talk, we'll chat. I get to know a little bit more about your journey, see how we can work together, and we'll go forward from there. So you guys, I pray you guys have a safe trading week. Make sure you guys who really look at these price charts before you take a trade, don't rush to jump into anything. Make sure the setup is there for you. And I'll talk to you guys in a later video.